trading commodity and currency derivatives from the Cayman Islands. So the advantage of us limiting our fund to people that are only sophisticated investors is that the regulatory burden is way lower. And that just comes down to two things, really. It's reporting and it is disclosure. When it comes to your marketing presentations, investor relations stuff, you have to speak equally to risk as you do to reward. So if you mention, 30 times that these, potential returns, you have to about 30 times talk about how this is also like an immense amount of
risky.
risk.
You may or may not already know that at the end of 2023, I decided to sell off all my portfolio and start doing larger deals. Fast forward about a year later, I decided to start a fund with my partners. We started a fund, a $15 million real estate fund investing in apartment buildings in Houston, Dallas, and Atlanta Metro, where we are taking distressed 80 to 120 unit apartment buildings and adding mental wellness amenities to them. I've been totally enjoying this space. Investing in single families has totally prepared me for this. And when I do something new, the first thing you have to do is throw yourself into the space. So my partners and I, Noelle and Arthur Lyons, we decided to join a community for fund managers. And one of the fellow fund managers that I met, we just clicked. My homie, Kevin. And Kevin has this really unique investing strategy. We cannot go into it here because it's top secret. And I tried to extract as much information as possible. And so Kevin decided to come on the podcast. And you're going to understand why I had him come on, even though he's so top secret about his investing strategy and running his fund. I promise you, you are going to appreciate it. It's a major gem. I reveal in this episode why I have him on. It's all about flying higher. I want you to go where there is less traffic. So with that being said, welcome to episode 187 of Nicole Purvey Classified, where we train and don't chase. All right. Kevin Dubrosky is the author of 8 business books, a longtime international pricing expert, and is the co-founder of Cigar Capital Partners, a firm launching the third quarter of 2025 with a focus on trading commodity and currency derivatives out of the Cayman Islands. Between sipping bourbon, smoking cigars, and playing Call of Duty with his wife, you're likely to find Kevin having spirited conversations on Rumi, Ram Dass, and Alan Watts, or philosophizing on the ephemeral calculus underpinning value exchange. I can't wait to ask you, what does that mean? Welcome to the show, Kevin.
Thank you.
Now that I've read off your bio, Kevin, why don't you tell us a little bit about yourself in your own words?
As far as your first question, like who am I? There's this philosopher guy named Muji. He's this like Jamaican Eastern philosopher who went through a lot in his life early on, and now is like this Buddhist Hinduism teacher dude that does retreats in Portugal. He's amazing. But he says this thing about identity. He says, never try to label yourself. Like, never try to figure out what you are, because it's like it defies any attempt to apply a category. There's just an unending, immense amount of complexity happening in our human experience.
You have no idea how timely this is. I have a newsletter, and I typically do series in my newsletter. I'll cover a topic and then I'll break it up into 3 to 5 parts. And so I just did a series about this term that I coined called about a person who is really smart but can't get out of second gear. And we've all been there. We know a ton of those people. And this person is what I call a cage genius. And typically the cage genius, the reason why they are stuck, even though they are smart, they are brilliant, they know all the things, they've taken all the courses, they've watched all the videos, but they can't match it up with their money, is because of this identity they have with being smart. And so in the 3 phases of breaking out of the cage, I did a whole series about detachment from identity. You are the observer. You are not the role. So that's good news and bad news. The good news is, if you are not the role, that means you can play any role you want.
Yeah.
So I get it. It took me 42 years to figure out that I am the observer, right? Maybe a little less than 42 years, but I am the observer, and
Mm,
I'm not the role. And
mm.
just for language, when people say, "Who are you? What do you do?" I spit off some stuff because you know you don't want to get into these long, deep conversations with people that will not understand it. But the reality is, it's important to stay detached from that identity, because when something comes along that challenges that identity, that's when depression sits in.
Yeah, or suffering, right? Yeah, because we have this image of who we are or what a situation or moment needs to be.
That
Even
part.
you, I mean, you and I have met a couple times in real life. We've been connected online for a lot longer than that. And I could pick adjectives to describe you. I'd say you're funny and you laugh easily and you're light but you have this like deep heart and you have this like soulful connection to the work that you're doing, and you're this committed mom, but you are also expanding into new spaces and new places and new things. And all that's true, I think, unless you've been tricking me. Whoa. But but if I was to say that's who Nicole Purvey is, then it would immediately blind me to the other 3,000 things that are also true of you. Right? And I'm like, "Oh, Nicole, oh yeah, she's not the smartest friend I have. No, that's so and so. Oh, she's not the most stylish. No, that's this other person." So this is the annoying thing about these little boxes that we put each other and ourselves in. We're like, "Oh no, it's not this, it's that. It's not that, it's this." When all of it is completely bogus. And I think it's just us trying to probably make sense of the world, right? To navigate
We
the
like
world.
humans like labels. They love labels.
We do.
We do. We love labels. So, with that being said, what role are you playing today, Kevin?
I just got off the phone with the broker dealer in New York that we're thinking of bringing on for our new firm. So I guess I'm playing finance bro today, playing emerging fund manager.
Tell us about the fund. That is one of the reasons why I wanted to have you on here. You're doing something so unique. You're the first person I've ever met that is doing what you're doing. So tell us about your fund. You're a fund manager like myself. So tell us about it.
Emerging, yeah, we're getting it set up.
Mm-hmm.
Thank you for the props. Um, I think what people mostly find unique about what we're doing is that we're doing it offshore, and we're doing it in a market that feels a little bit maybe uncommon. And that is that we're trading commodity and currency derivatives from the Cayman Islands. And we're also setting up the firm in Cayman Islands that is the general partner of the fund. And we're also connecting a fund as a feeder fund in the U.S. for U.S. taxable investors that want to participate. But even when people hear something like currency and commodity derivatives, what the heck is that? Um, I had the same question. What the heck is that? Because I'm a new finance bro. I recently obtained my first financial license because I had to for regulatory reasons, according to CFTC. I got my Series 3. But before that, I didn't even know what a derivative was. But in very simple language, a derivative is something that derives from the underlying asset. So you could trade gold or currencies directly. You could, buy gold, or you could establish a position in a currency pair, or you could trade any number of specialized financial instruments that kind of sit on top of those assets, and they kind of move, side to side, up and down, according to what's happening with the underlying asset. So that's all derivatives are. So, like, for example, futures are considered sort of a derivative product because you're agreeing to buy a thing in the future, or options on futures, like purchasing or selling. The option to buy or sell something in the future is also a derivative. It's sitting on top of the underlying asset. So, yeah, we trade a specific kind of derivative that sits on top of currencies and precious metals.
Just to make sure that everyone is clear, right? So Kevin has his series three. Series three is for commodities, right?
That's correct.
Right.
Yeah.
So you think about people in the finance markets, The Series 7 is for stocks and bonds and mutual funds. I used to have my Series 55, which was for new issue preferreds. And he has his Series 3, which is for commodities. Okay. So with that being said, there is very little that Kevin can actually share publicly about what he's doing, right? And this is one
Super
of the
top
main
secret. Super
it,
top
it is
secret.
very top secret. So the thing
Yeah.
that I find most interesting about what you do is the explanation behind why it's top secret. Can you share that part?
Well, I mean, playing in the fund space, especially with, global macro strategies, there are so many regulatory considerations that come into play.
Mm-hmm.
Like with us, we're intending to attract investors from Canada. I'm a Canadian, but I'm located in Los Angeles at the moment, married to a very American woman. But we're setting up in the Cayman Islands and we're trading commodities. So we have the CFTC and the NFA, but we're establishing a feeder in Delaware that's regulated by the SEC. But we have the Ontario Securities Commission and we have the Cayman Islands Monetary Authority. And our broker, which is our primary trading partner, is located in the UK, and they're regulated by the Financial Conduct Authority, the FCA, which is the British version of the SEC. So there's all of these complex regulatory things kind of layering on top, on top, on top, on top. So during this process right now, we're just being incredibly cautious in what we say, um, because it's a super ultra crazy hyper regulated space, and we want to play by the rules and we want to do it the right way. So
Well, share what some of the rules are about why you can't share. Like that part is really interesting to me.
yeah, because we're pre-launch still and we haven't had
Mhm.
materials that have been approved, for example, by our onshore legal counsel or our offshore counsel. Actually, that's a little fun thing I can share. As somebody who is not American, there's this hilarious thing that is hilarious to me anyway. But Americans are so used to a U.S. centric worldview that anything, any service provider located on American soil is considered onshore. And everything that's not that is offshore. So I don't know if you know this, but that means that Canada is an offshore jurisdiction.
Mm.
Canada's like right there. It's like you can walk across the border and walk in, but it's offshore. Nope, that's offshore. And Mexico is offshore, even though you can drive through into Tijuana,
Right,
just south of San Diego. But it's
right.
offshore. But anyway, yeah, there's a lot of compliance restrictions and requirements that need to be satisfied when sharing any sort of performance or projections or even risk adjusted metrics. So we're just a tiny bit early to be able to do that publicly and openly. And we're also making final decisions as to the nature of the type of investor that we can accept into the fund. And depending on the exemption that is selected, we may be limiting the opportunities that we have to a particular kind of investor that's known as a qualified eligible person in the eyes of the CFTC. So, yeah, there's all of these considerations that have to be factored in,
So
even
okay,
for fun, light conversations like this.
talk to us about the benefits of having a fund where your investor is a qualified entity versus so we have these three main types of entities. You have like a regular person, then you have a accredited investor, then you have a qualified investor, right?
Yeah, that's a nice simple way to categorize it. Yeah, I mean,
Yeah.
I think we're all just regular people, but yeah, from a financial perspective,
From a financial
yeah,
perspective. So talk to us about some of the benefits of like you having this fund or the reasoning why your fund, the way that your fund is set up, that you would only be able to solicit or even discuss the fund with qualified investors. And the reason why let me just give you some context. The reason why I'm kind of peering in here is because one, I want you to shine, but two, I think a lot of times we get so pigeonholed as business owners, and I'm going to talk about your 8 business books that you wrote, but we get so pigeonholed about one way to do things. And sometimes the easiest way to do things is to fly higher, right? Like there's less traffic up there. And so, you know, if people don't know these things exist, then they won't know how high they can fly where there's less traffic. So talk to us about having a fund that where you can only solicit or even discuss anything with qualified buyers, and what are the benefits?
I like what you said about less traffic and flying higher. You know, the basically all of the regulatory bodies that are in place right now across any domicile, all these different jurisdictions, across all these different asset classes and stuff, they're there to protect the integrity of the market and to protect the little old ladies from getting fleeced by scammers, right? From our grandmas and aunts and uncles and, you know, cousins and neighbors from being taken advantage of. So it's designed to protect people that might not know how to tell right from wrong, up from down, black from white. So built into this regulatory framework are, I guess you could say, allowances for somebody who's a little bit more sophisticated, who actually knows what they're doing and has made a few investments in a particular area before, and who has a little more money than, you know, the average person. So they can afford to sort of absorb a loss, even though it still sucks for them, because money's money, you know. And these regulatory bodies have basically said, you know what, if you meet this criteria of, you know, experience or net worth or, you know, investing background, then yeah, you can participate in funds that don't have to jump through as many hoops, that don't have to spell out every single detail to a everyday investor. So the advantage of us limiting our fund to people that are only sophisticated investors is that the regulatory burden is way lower. And that just comes down to two things really. It's reporting and it is disclosure. So if you are dealing with sophisticated investors, there's a lot less disclosure up front. You don't have to create like super long format crazy. I shouldn't say crazy. That's sorry, regulators. I don't mean crazy. You know, a super long format, incredibly detailed. In fact, here's a fun thing: the CFTC guidelines. And by the way, the CFTC is the commodities version of the SEC.
Mm-hmm.
So years ago, the SEC and the CFTC got together and were like, okay, we'll do all this, and you guys do all that. So the CFTC has said, you know, if you want to sell what you have or your investment strategy or whatever to an everyday person, you have to actually include this verbatim risk disclosure, like word for word. And they even tell you, like, you have to bold these words and it has to be at least this size font and nothing. This has to be on page 1 and this has to be on the first few pages and you can't mess with it. And that's great. Like it protects, but it's also a higher burden of like, more things you have to make and produce and monitor and submit and have approved and all that kind of stuff. So, yeah, it's easier and faster and simpler
To raise
to be
money.
able to deal with sophisticated investors. Yeah.
Okay, so would you say overall, the way that you view it, would you say when you're dealing with these more sophisticated instruments and the FT, what is it, the FT,
CFTC, CF.
CFTC, and they say, hey, you can only solicit to qualified buyers, right? Would you say that it's easier to raise money considering there are less qualified buyers, and which means the barrier to entry to get to them may be higher? Would you say that even though that is the case, it's easier to raise money, or you feel like it would be easier to raise money?
I guess we're going to find out, aren't we? I think it's the same. Like right now, I'm looking out the window at the Hollywood Hills. And it's kind of like the question, would it be easier to sell one $30 million house in the hills as a real estate agent or, you know, 20 condos that are $1 million each?
Right,
I don't know.
right.
You know, I think some would be like, I'd rather sell the 20 condos. I'll get in with some builder guy, you know, and I'll just be in the office. But others would be like, no, I want to be like selling Sunset. That's my vibe. I sell 4 houses a year, and so I think it comes down to your network and maybe the kind of game you want to play.
Yeah.
For me, yeah, we're exploring this for simplicity and elegance and speed reasons. But I guess we'll find out, as I said.
So it's funny because my partners for Invictus Elite, we had a month-long conversation about whether we wanted to do 506C or 506B, right? And so for those of you who don't know, when you're doing a fund, B is when you can do unaccredited investors up to a certain amount, and but you cannot advertise publicly. C is only accredited investors, and accredited investors are people who make $250,000 or more for the past 3 years, or have a net worth of $1 million as individuals for the past 3 years. So, or you can do only accredited investors. You can advertise. So we went back and forth and back and forth, and this is a longer conversation. But at the end of the day, the conversation came down to like, what do you think is easier? Do we want to raise $20,000, $30,000, $50,000 from unaccredited investors that totals 15 million, which is a lot of people, a lot of people? Or do we want to say, hey, unaccredited investors, 100 million, 100 minimum, and take down, bigger chunks, but only from a specific person? Can our brand reflect that? And so we went back and forth, and we decided to go with C. And so unfortunately, some people won't be able to invest, but I feel like I have all confidence in us, and as well as the brand, as well as our marketing, especially since we can now solicit and market publicly with a fund. We classify ourselves as the C. I feel like, it's a no-brainer to me. So, it's always your personal preference, and as well as like you said elegance, right? That's a branding term. You may not be thinking about brand in a normal sense, but like, hey, this is a reflection of me. What circles do I want to move in? Who do I want to have conversations with? What do I want this to be?
Yeah, that's good. I like that. Not that you asked me for my validation of you, but yeah, I do like that. That's cool.
Yeah, no, I mean, I'm just saying it as a reflection of like, this the thinking, right? Why you would do it.
The other consideration too is that, like you said, maybe you have people in mind that you would love to have to create an opportunity for them to participate. And this is like the ugly side of going with the higher end of a sophisticated investor, because it means that somebody who doesn't meet those regulatory requirements, whether it's net worth or experience or whatever, they can't play in what you're doing. They can't get a piece, which is kind of sad, because you might have 3 people that are your besties that you would love to be able to give them a chance to put their money into this thing because it can grow, and they can help them do what they want to do, but they won't be able to. So it's like, do I want the complexity, or do I want to help the people close to me? We have to decide. Ultimately, as you said, I mean, at a certain level, especially with a C, a 506C, Reg D 506C that you guys are doing, it means your non-accredited friends can't participate. So you're cutting them out, which is sad. But
Is it though?
wow, what a hater! Oh
No, I'm
my
not.
goodness.
That's the last thing I am, is a hater. But like, the reason that they have some of these laws in place is to protect people from themselves, right?
Yeah, that's true too.
And so like this is what the government, whether it's right or wrong, but this is what the government has said, like, hey, people who typically make this much money, they're not going to be asking for, a return in 12 months. They understand what this means. And it's the same thing for the qualified buyers. Like, hey, someone who is a qualified buyer, they have expressed that they have experience and they understand complicated instruments. They are not going to, one, be investing their last, right? And then also, they're not going to be asking you, hey, Kevin,
Where we at?
I need my money.
I
I
need
know
my
I
money
just gave
back.
it to you 3 days ago. You
Yeah,
know?
that's true.
So when I say, like, is it really a bad thing? And then also too, like, your friends and family, like, please, I just want to eat Thanksgiving. I just want to eat this mac and cheese. I don't want to talk about this right now.
Yeah. Yeah, that's a nice. I like that perspective. I haven't heard anybody mention that before. It also protects people from themselves if they're not in a position to kind of weather a significant loss. Because all investing also entails risk. Actually, here's another fun fact that with the CFTC, um, when it comes to your marketing presentations or your marketing materials, your sales presentations, investor relation stuff, you have to speak equally to risk as you do to reward. So if you mention, 30 times that these, potential returns, you have to about 30 times talk about how this is also like an immense amount of risk.
Risky. I don't know what I'm doing. I've never done this before.
Well, even
I say,
yeah, it's funny.
there was someone that I know that did a fund, and that went belly up. But one of my good colleagues printed off the paperwork and brought it in to this room where it was a bunch of our other friends, and they were just like poking holes at this person's fund. And in the fund, it was basically like, hey, I don't know what I'm doing, da 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 da. I've never done this before. And they were like, he doesn't even know what he's doing. And I'm like, no, he has to say that. Like, now he didn't know what he was doing, but
Yeah,
they have to say it.
yeah. I'll probably accidentally set your money on fire. I might throw it out with the trash if it's dark out. Yeah,
Right.
it's not quite that bad, but yeah, I know what you mean. Which is also good though. Like it's healthy. Like it like grounds people because you can get excited about returns from whatever potential fund manager is projecting, but the reality is all investing entails risk.
That
Yeah,
part.
you can't buy anything that isn't yeah that doesn't contain risk. And then again, that's like life, though, right? No guts, no glory, no risk, no reward. So
That
yeah,
part. What excites you most about this process of starting a fund? Um, like, what was in your heart when you decided to do this?
the first time I heard about this opportunity, I got off the phone and I was in Bali with my girlfriend at the time, and I just started like furiously journaling. And she looked at me and she's like, "What are you doing?" And I said, "If what I just heard is true, if this thing checks out, then this is gonna change everything for a lot of people." Um, so it's kind of cool. I know, and it's so annoying because when you hear other people say that, you're like, "Oh boy, here we go. Here we go. Another delusional idiot who has been drinking the Kool-Aid." But there's only been a few moments in life, Nicole, like 3 or 4 moments where I was like, "Whoa, like this is a thing." I think for parents, it's when a baby is born, or for people that are partnered or coupled up, it's when they realize, whoa, this might not just be a fling, but this might be a person I can build something with. Or yeah, so that's what excites me. It's like this doesn't feel like a cool thing to be doing in 2025. This feels like
A thing.
a generational thing that could change everything for my bloodline, even, which is again big words, but yeah, that's what excites me. Yeah.
I think that might be a shared sentiment amongst fund managers, right? So, we do business, and we figure things out. We go left, we go right, we go up, we go down, we go up, we go down. And then, you gather all this data. And then the day that you decide you want to do a fund is like, oh, why did I think of this before? And then your brain is thinking about all these different ways it could fail. And you're like, Brian, are you telling me like, yes, there is risk, but it's like, hold up. I've been doing this the hard way and gathering like, and then you go back and you try to think about all these different ways. And then you're like, nah, this is really the only thing that makes it worth it. This is it. And I think we all have this aha moment. And we want it to not be an aha moment because we've had this so many times. But you keep thinking, and then you stuck, and then you hear, and you're like, listen. Then you join a community like you and I are part of, and you meet other people, and you're like, oh, y'all get it to okay. I'm not the only crazy person. Okay,
Yeah.
this is the way. This is the way.
This is the way. Yeah, it's fun. Definitely fun. And my wife, excuse me, is also going to be joining me as part of the GP. And she's also acquiring financial licenses needed to be able to, be on the investor relations side. So that's also kind of amazing. I've never had that experience before. I've been married before. I've been in a relationship before, but never with someone that I was in business with as well. So, and it's beautiful. It's really working out surprisingly well so far. So that also brings a lot of delight into my experience. Yeah.
That's a beautiful thing. That must be a development since we.
That is new. That's new. You didn't know
Yeah, because when we all met,
that.
she was
Mhm.
like, I know what's going on, but he's doing all the work.
Exactly. That's the point. Yeah, like she knew as much as I did, and then when I was studying for the Series 3, she was studying beside me, and I was explaining everything I was learning, and she was grasping it all. And then it just she, but I applied gentle pressure over the past year, but there was a moment a few months back where she was like, I think I want to be
Oh,
part of this. So yeah, it's amazing, and she's amazing. So yeah,
so she had the aha moment like we did.
yeah, she did. I mean, she has, as you know, she has a career and a lot of success and a lot of talent and skill in what she does already, what she's been doing. So it's a bit of a shift, but hey, this is life, right? Let go of labels, like you said. We could talk ourselves into thinking, "Oh no, I'm X. I could never do Z." When it's yeah, you could do Z if you want. The question is,
You,
do you
you
want
didn't
to be a
realize
Z? That's
you
the
didn't
question.
realize that X was prepping you for Z. That's the part. X
Perhaps.
was practice for Z. You didn't even know.
And then, but sometimes it's also holding you back from embracing the beauty of Z. Sometimes,
Sometimes
but you're right. It can prep. Yeah, everything up until this moment has,
it's practice.
yeah, shaping, prepping, preparing. Yeah, that
All
is
right,
prepping.
so let's talk about these 8 business books. Let's talk about them.
It's funny.
How did this? How did what?
Yeah, I wrote the first one in 2007. Wrote and published it, and I published the last one, the most recent one, in 2023. Yeah, and that was actually before I got into this fund space. And almost all of the books are on harnessing the power of value to support a higher price point in the services that you're offering. So I came from the service business world. I ran a home services company for years and years and years, and then started to have some success. And then other people started to come to me for advice. And so I started writing books and traveling around the nerd circuit of the home services world that I was in, and giving talks at nerd conventions. And yeah, wrote a whole bunch of these books, and then started to expand my clientele on a consulting basis outside of home services into any service. And along the way, I became a master of psychological pricing methodologies, and helped my clients achieve some pretty remarkable outcomes without changing anything about their underlying deliverable. It was more about just changing the way they see what they have, which is also so interesting in the fund space. I'd like to circle back and connect a dot here.
Mhm.
When I first entered this world about a year and a half ago, it amazed me that there was this mentality of like 2 and 20. Like fund managers want to charge a 2% management fee, and then let's call it an 8% hurdle rate, and then take 20% of the performance as carried interest after that. And that's like the most common structure out there. Maybe there's a
Mhm.
little bit of like a catch-up fee worked in there as well, but it's basically a 2 and 20 fee structure. And what that tells me immediately is that most of the industry is self-commoditizing. It's like real estate agents. If real estate agents are so unique and so amazing, and this team is better than that team, how come they're both charging 6%? They're
But
both charging identical fees.
but here's the thing, Kevin. I could we gotta hop because I got a coaching call in just a minute. But we
Okay.
could talk about this for a really long time because this is what 97% of humans do. No matter how different your industry is, everybody ends up doing the same thing. You have very few people who think outside the box. And so, hey, this is what's going on. What do people do? And you got your outliers, but eventually, no matter how crazy it is, everyone starts doing the same thing. And so this goes back to the flying higher. Few of us will say, y'all are doing the same thing. That's whack. Hey, if I just fly a little bit higher, it's less traffic up here. Welcome to the story of my life. Like, just always just, hey, I'm going to do this. And then once everybody's doing it, no matter how unique it was when I first started it, once everybody's doing it, I don't compete with y'all. I compete with myself. And I'm not about to have this discussion. I'm not going to have this discussion comparing, oh, why me, that person. If you got that question, bye. I don't want to talk about this. Let me go back and rework my product or my service. Because when you come to me, you'll be like, Nicole's the only person in the world that does. Nope. I don't care how weird or unique or how, just one little small thing. Nicole's the only person that makes shoelaces that's 99.723 length. And everybody else does 99.724. I will do my 0.3 till y'all start. So one other person start doing the point three. I'm a 0.2. You know. So yeah, I have a lot to say about that.
Yeah, and that's where all of the beauty, that's where so much delight and beauty lies, in these like little distinctions. And that's how we navigate life, When I'm visiting Atlanta and I want to say hi, I'm not going to ask you, where can I get the third best burger in Atlanta? I'm going to say, where can I get the juiciest, most flavorful, mesmerizing, take all of my money hamburger in Atlanta? Like I want the outlier. I want the thing that is exceptional in a certain way. And if I want a burger, I don't want you to tell me about some sushi place that you happen to love more. I didn't ask for sushi, So that's what's also kind of amazing. Like the world is full of all of these beautiful things that appeal to different people. All of these little sparkling gems and diamonds, and some of us want the rubies, and some of us are into emeralds, and some of us only fuck with it if it's an actual diamond. So this is what's cool. Like when we figure out what kind of gem we have, and we just allow that thing to sparkle, we don't worry about the people that don't want it. We can wish them well, and we can direct them towards an emerald or a ruby if they say they're not into what we have. So yeah. Anyway, we could talk a lot, like you said, about it. But
Yeah.
the books that I wrote were mostly about that, and about finding a way to quantify and evaluate a price that would be commensurate with the unique value of the thing that you have. So it's been very helpful, even in the fund space. You know, reconnecting with what is unique about whatever you have, because then you can structure the fees accordingly to reflect that.
Mm.
Mhm.
So where can we? Are your books on Amazon?
They were, but they're all out of print now. You can't get them. Sorry, snooze you lose. You weren't even
Girl,
snoozing because you didn't even know about it. But yeah, they're all out of print now. So
you're gonna have to when you go live, you're gonna have to print some because this is in your
no,
bio.
nope. Sorry. It isn't my bio because it's true of, who is this guy? But
No, send me. Can you? I know you got some lying around the house. Can you send me some, please?
no, there isn't actually any laying. That's a lie. I do have one. I have
All
one
right.
hard copy that I took to Bali a year ago. I still have it. The cover's a little bit torn. I have one. I'm not going to give you that one though. That's mine. I'm sorry.
So if can y'all tell Kevin that when he goes to market with this product and he wants to invest and he wants to impress these qualified buyers,
That's funny.
tell him in the comments that he needs to throw a couple grand. I done self-published before. I've written a book. So a couple grand. You ain't got to do that. You could, for a couple $100, you could print a couple copies, throw them things up on Amazon, mail them to the Amazon Center.
I could, but I won't. That's okay. People, there's more books than me. We all have 1,000 books in us. So
Yeah.
there'll be more. There'll be more. Yeah.
Well, when you change your mind, send them to me first because I collect them. And
That's good. Perhaps
Kevin,
so.
if our listeners want to learn more about you and want to connect with you, where can they find you?
Yeah, I would. You can just Google me. I mean, let's be real. That's what everybody does anyway, right? Just
Yeah.
Google my name, and you'll find some stuff. You find some old pictures and new pictures, and my website, and maybe a little bit about what I'm doing with the firm. But yeah, Kevin Dubrosky. I'm sure Nicole will. You'll have a link in
I'll
the
have it right on the screen.
notes. That's right. Yeah, that's the simplest way.
All right, Kevin, thank you so much. And I love what you're doing, and I can't wait until we can if one day we could talk freely a little bit more about it, because I know even when you do launch, you still got to be some hush hush, right? You can't even talk about it to certain people that are not qualified. That's crazy. I love it. I love it. I do. I love it. Like, I can't even talk to you about this. I'll get in trouble.
Fill out these things first. Let's see if you are allowed to learn about it.
For me to even talk about it. Okay. I love exclusivity. Like, I love exclusivity. I've had companies, I've had brands where it's just like open to the general public, and that's fun. That's a thing. I done that, but now I just love exclusivity. So I love what you're doing. And whenever we can put out more information, you're more than welcome to join us. And thank you so much for coming on.
My pleasure.